Welcome to today's morning report analysis videos with me, Richard Perry, market analyst at Hantec Markets on Monday the 8th of April. We've got a fairly mixed outlook, a little bit of a dollar correction, a little bit of risk off. Nothing too significant yet, but it is interesting to see that what we've seen is Treasury was just sort of coming off a little bit. We had that payrolls report on Friday which showed that average hourly earnings was a little bit disappointing, a little bit lower than expected. Headline payrolls were sort of fairly positive, but yeah, I think that average hourly earnings number has taken the markets a little bit lower, and there's nothing really doing in terms of news flow over the weekend to get overly worked up about, and I think what we've just seen is maybe a little bit of an unwinding of the recent move that we've seen actually, and that sort of helped to drive a little bit of dollar weakness today. You can see here on the dollar index, a little bit of a move lower on that dollar index as euro, sterling and the yen have all strengthened. A little bit of risk off as well as those yields have fallen away, and you can see that through equity markets all slipping back. DAX underperforming in Europe. Gold risk off, dollar weaker generally tends to equal gold strength, and that's what we're seeing. 12.97, that's above 12.94, which has been a basis of resistance in the last week. I'll talk about the implications of that on the technicals in a bit, but yeah, we're just seeing a slight air of risk aversion, nothing too significant to start off the week. In terms of data points today, you got the US factory orders at 3 o'clock, and the expectation is for negative 0.6% for the month-on-month numbers for February. Now, my chart of the day is Euro sterling. Now, what we have seen in Euro sterling is a very interesting downtrend. That downtrend has been tested. Following on from Friday's move, it does seem as though the euro is beginning to show signs of a bit of a initial support, perhaps even recovery, and that's starting to show through on euro sterling. If euro sterling continues to rebound, and it looks like the momentum indicators are basically at a crossroads here, along with the market which is testing this downtrend. That downtrend comes in today at 86.30. We've also got the longer term key band of resistance. Look at this, between 86.50 and 86.90. Massive overhead supply back from throughout 2017 into 2018. So basically, this is the point at which resistance starts to come in. Now, how the market responds to this resistance will be key, because I think if you certainly see a closing break above 87 figure, then we could be looking at base pattern territory. But you'd be looking out for the momentum indicators to give you a clue first, and what we'd see is the RSI, which is testing 50 again, which is an area where these rallies had previously in the last sort of 3 months failed. We've also got the MACD lines, which are actually rising, still below neutral, so still medium term negative, but this could be the beginnings of a bit of a turnaround. So watch out for this resistance of the downtrend here coming in. Now, that's not euro sterling, but you do have on the hourly chart still a fairly mixed outlook, still fairly neutral. It's a bit choppy on the moving averages, a bit uncertain on the momentum indicators, and little real direction on that. So what you'd need to see is the market continuing to post these higher lows and moving higher. You've got the breakout above Thursday's high, which has become supportive today, and the market has rebounded again, so you'd want that to continue. There's a bit of a pivot around 85.90 area, and continue this run of positive candles that we've had. Friday's high 86.37, initial resistance arguably, but I suppose 86.50 being that reaction high from 2 weeks ago, and then obviously that 87.20 mark, which above that you really are into recovery mode on euro sterling. But there, as I said, the euro is beginning to turn a bit of a corner, and perhaps given the Brexit uncertainty, if that continues and the can gets kicked further down the road, you're not likely to see sterling gaining too far, so that could well engineer into a recovery pattern on euro sterling. So with that in mind, I wish you good luck in your trading today, and I will speak to you soon.